Welcome back. You're watching us here on Chartbusters. Now, we've spoken about the secondary markets, and the debutant today on our bourses is TVS Supply Chain. In fact, the first TVS company or TVS group company to hit the streets in the last 25 years. It's been a decent listing given the market conditions, up around 2% odd. It opened about 5% higher, still holding with some gains. For TVS Supply Chain, we have R Dinesh, who's the Executive Vice Chairman of the company, joining in to give us a further color of what the growth prospects of the business look like. Thanks a lot, Mr. Dinesh, for joining in. You know, the last time we spoke, you did talk about increasing revenue. You did speak about increasing margins, aspirations, etc. But you couldn't give much color because you weren't listed. Now that you are, the street wants to know what are the prospects going forward as well. So the first question is, with the network that you currently have, with the existing setup, how much can you scale your revenues higher to, and by when?
So if you look at it, I think, thank you for giving me this opportunity. And I think if you look at it, we as a business are very differentiated. As you mentioned, we have built up not just a network, but also have a good set of capabilities which we can offer to our customers. And as you would have seen, we already have about 72 Fortune 500 companies who are our customers. So we have an opportunity to increase the breadth of services which we offer to them and also move into newer geographies with them. And that's been our consistent growth model of trying to see how we look at it from a future perspective. Therefore, if I look at from how we see this opportunity, there are two sets of opportunities, one with our existing customers, one with new customers with whom we have an opportunity to give these capabilities and use our network. And from a network solution side, I think the countries where we are present in, we have the ability to further scale it up using the same network for new customers as well as new services which we can provide to them.
Scale it up by how much?
The way we would look at it is that, sorry?
Scale it up by how much?
Sorry?
Say currently you are doing around 10,000 crores in terms of top line.
Yeah. So I think if I really look at it as a vision, I think we would by FY27 be looking at a significant growth, and I would say twice this is what we should be really looking at by 27.
Your revenues will double by 2027. Is that correct, Mr. Dinesh?
That's the vision.
Okay, lovely. And what about margins? Do you aspire to move to double-digit margins? If yes, by when? If you could tell us on that front. And also your ROE, it's still in mid-single digits. The markets like higher ROEs. Is that possible?
No, the way I would look at it is if you look at benchmarks across the world, and these are global supply chain companies like we have, but we may have different capabilities. But as a benchmark, if you look at it, typically those EBITDA margins have been in the category of between 10 to 11%. And if you look at RoCE rather than ROE, and of course that will also impact ROE, they are in the mid-teens or high teens. So that is what we really benchmark ourselves with. And the customers we have and the opportunity to leverage the network and the cost base which we have got, because if you look at the other factor, we have built this platform for, I would call it, the ability to scale it up. And that's what our focus has been in terms of how we look at our business. So I would, rather than say, when it would happen, I would say that's a benchmark by which we are looking at ourselves.
And double-digit margins by when?
No, as I said, I don't want to give an exact number as to which target, but that's the benchmark which we're looking at.
All right, the one number that you can give us is on finance costs, because you've raised around 525 crores to repay the long-term debt. Your debt as of last fiscal was close to around 1,700 crores, finance costs of 190 crores. How much will that number go down by? Because that will then directly impact your profitability positively.
Yes, definitely. And if you look at even last year, we had about 107 crores equivalent in interest costs for our long-term loans, which obviously we will be repaying out of the proceeds of the IPO. So approximately you can take it as that would be the number which we are looking at as immediate benefit which will accrue to us once we repay our long-term debt, which is what the stated purpose of the IPO itself.
So finance cost reduces by about 100 crores.
I would call it. Exactly. 107 crores was the number last year. And I mean, if you look at today's interest cost, it may be different, but that's for the future, right? So I'm looking at from immediate benefit, that would be what you will see.
All right, take that point. Thanks a lot, Mr. Dinesh.
Thanks a lot, Mr. Dinesh, for joining in, and congratulations on this listing. Ringing the bell, it's some in India we dream to do that. So congratulations on that, and wishing you all the best. And Mangalam and we will be waiting by for you to give us more numbers as you declare numbers periodically. Well, time to move on then. And as we do that, I think we can slip into a snappy break. We come back, we continue our focus on the markets. Don't go anywhere.